Hi guys, and welcome back to another video on the NZ Day Trader channel. So today I'm just going to be talking about how to exit a position correctly, just in case you get caught in a really bad earnings announcement or a really bad dip. So in front of me here we have the NZ50G. So for those guys that have been watching my previous videos, you guys know that I use the NZ50G to see market sentiment. So the market sentiment for me is basically if there's buying going on in the market or if there's more selling going on in the market. So if the NZ50G is uptrending, it means that there's buyers in the market and people are buying up shares, and there's more likelihood of shares continuing higher. If the market's trending downwards, then that means it's in a rundown phase and there's more likely more seller interest in the market, which is more likely to drive stocks down or eliminate any gains on stocks. So I'm just going to be looking at the past few days. So in the past few days, you can see that we've had a few red days here, followed by some green days, and followed by some really nasty 2 red days as well. So right now, the NZ market is still downtrending, so it needs to show a series of higher highs and higher lows for it to be uptrending again. But usually in these huge red candles here, it just means that there's probably some news that's happened in the market that's caused investor fear, and people are likely reducing their positions or just getting out of stocks because they're afraid of what the impact of the news will do to certain companies. So for example, so we saw the Omicron virus come out recently, so people are thinking there's a new strain of COVID coming out, and that's probably what's caused the market to dip. So let's just have a look at some stocks that have dipped over the last few days, especially after earnings announcements. So there's about 3 that I saw that dipped really hard. So first of all, let's start off with Serco. So we saw a huge dip in Serco here, so almost about a 20% dip, so which is a huge dip. So for people that are stuck in this one, obviously the earnings that come out on the 25th, which we saw a little bit of a gap down. There we saw some huge selling going on. There we saw more selling over the last couple of days. So people are wondering, so what do you do if you get caught in a dip like this? Well, there's 2 things. You can sell immediately. So if you can sell during this patch here, or if you're not able to get on the first day and it's already, your stock is low as hell already, then it just means that what you're going to have to do is you're just going to have to wait till a bit of a spike, and then you can sell into that. So what that means is when you sell into a spike, it means that you're going to reduce your losses, because at the end of the day, when a stock has gone down by like 20%, investors and traders, everyone just starts to see value. They're like, all right, this stock is, it's gone down by 20%. As soon as it stabilizes, I'm going to buy. So what you want to look for is if your stock is going down, if you're not looking to hold long term and you're looking to get out in the short term, is I would wait for the selling to stop, and I would wait for it to kind of send a trend high. And when you see an over exaggerated spike, and an over exaggerated spike looks something like this, or or something like this, try and get out here. So try and get out to something that looks like that, or that looks uptrending like that. And that's just basically going to minimize your losses, because if you're getting out in a huge dump like this, then professionals get out on spikes. They're like, all right, sweet, the market's selling off a little bit, or the stock is selling off, and I'm just looking for the next spike upwards. And then I'm looking to get out of that and take a loss, but take a minimal loss than what I originally would have over here. So for a company to go down like Serco, to go down by 40%, is very unlikely. These are proper companies. So it's already down by 20%, and it could go down by another 10%. But if you want a good extra strategy, then what you need to do is just wait for, some basing action, then for it to kind of spike into it and then kind of sell out there. And that's how you minimize your losses if you get caught in a really bad trade. Now let's look at another one. So the other one was PEB. PEB was a really bad one as well. So 126. So here we saw, earnings come out on the 25th, and we just saw this massive 13% dip. And then what happened after that? Then after that we just saw a bit of a bounce. So for anyone in PEB, then you should ride out this trend as long as you can, and then if it's showing a little bit of weakness, then I would probably get out there if I were you. And that's basically going to minimize your losses, because again, you do not want to be selling into when the market's just dipping hard. You don't want to be selling into that. You want to be selling into the next sort of spike, and that's going to reduce your losses. So another one, let's have a look. Another one was RAK, had their earnings as well, and we saw a bit of a dip. Alrighty. So here as well, you saw, I think the earnings came out on the 25th. Yeah, so the earnings came out on the 25th, and saw a huge dip at 168, so people just taking profits, but it came back up again. These wicks are very strong indication that the stock is likely to continue higher. And the reason I say that is, what's happening is, these are daily candles. So when there's a daily candle, it represents a high, a low, an open, and a close on the day. So when you see a wick like this, it means the price has opened. It's gone as low as 168, and then it's gone back up to close at 178. This means that there's investors and people sitting there ready to buy the stock at those levels. They've saw an area of value, and they've bought up the stock, sending it back higher. And you can see that there was not much buying going on here. So these are the ranges you want to get into. These ranges here are really good because they signal continuation higher. Like it'll probably fluff around like this for a while, and then this one will probably continue higher into the future. And this is a good way to make money, especially if you want to like hold like for months and stuff. So it depends on how you guys want to trade. So this one's still looking very bullish, and obviously something like Circuit has had a huge earnings dip isn't something that's bullish. So you want to be looking for long-term uptrends. So this RAK is a very quality stock, and you can make a lot of money on it if you trade it properly. And I'm just seeing if there's any other stocks I got recently. Let's have a look at some stocks here that also taken a hit. Let's see. So pretty much all stocks lately have been, they're pretty much downtrending all over the place. You see RBD coming back. So all the stocks have got pretty much wasted lately. And here OCA is about 20% off its highs as well. And that's starting to reverse and go up. So I think I talked about that pattern before, the double bottom. That should likely continue higher. Right. NZF. I think I saw NZME doing really well over here somewhere. Let's see. This is how I quickly scan stocks. So the way I scan stocks really quickly is basically I just put all the NZ stocks on one watch list, and then I just go through it and I just spacebar, 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 spacebar. And if something's looking bullish, then I put on my watch list. So this one's looking quite bullish, so NZME. And you can see the trend on that. Look at that. That's a quality stock right there. Again, you can see a lot of these stocks are choppy, but you need to find clean stuff. So NZME is clean, RAK is clean. You know, this is the stuff that's going to make you money. You just got to know how to trade it properly and how to manage your risk, because at the end of the day, trading stocks isn't guaranteed. You need to be managing your risk, and you need to make sure that you know what you're doing. You have target prices set, you have limits that you'll get out, and proper position sizing so you know your loss amount if it goes to a certain level. So these are all very important factors. Cool. So that's all for today. So if you guys have any questions, chuck them in the comment section below. If you want to reach out to me on Instagram. I'm quite active there. You can see my profits, and also I have like a free course in the link below if you want to learn how to get started with trading NZ stocks. In the meantime, guys, happy trading.